Hello, good morning everybody. We are just doing a quick sound check. Make sure you can hear us loud and clear. And the visuals are all okay. Oh, okay, fantastic. Okay, thanks Richard. Thanks to the FX Street team there. Okay, perfect. So with that guys, we'll get cracking. So today we've got a lot to cover on today's webinar. The markets it's been a really lucrative week on the markets. I'm seeing quite a few setups just this morning as well, so we've got a lot to go through. Next week's going to be very big as well, with the on Wednesday the FOMC, the Federal Reserve statement in the evening, so that's going to provide really a big trading opportunity to end the year with. So we'll go through some live technical analysis today, and as always, we'll be doing a Gold and Silver Club end of week review, so presented by myself, Phil Carr and Nick Kalsi at the Gold and Silver Club. We'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for gold, silver, oil, natural gas and the commodity currencies. We'll be looking at the top trades of the week. We'll go through live market commentary and technical analysis. We'll also look at the week ahead, so key events looking forward as well, any key events we may have today too. And of course, answering any questions you may have as well. Okay, so this week, the major fundamental news, the US House passes a 2-year budget deal. So the Republican-controlled US House of Representatives on Thursday passed a 2-year bipartisan budget plan that would end some automatic spending cuts on federal agencies and replace them with more targeted government savings. So by an overwhelming margin, the House passed a measure that also aims to end the partisan fighting between Republicans and the Democrats over fiscal affairs, which led to October's 16-day partial shutdown of the government. So the House passed a bill approving the deal reached on Thursday night on a vote of 332 to 94, gaining wide support from both camps following the era of heated political brinkmanship that disabled any potential attempt for compromise. So an overwhelming 169 Republicans and 163 of the Democrats voted for the legislature, while 62 Republicans and 32 Democrats voted against. So the agreement now comes to the Senate for approval, and the bill is expected to be voted on next week before the current funding runs out on January the 15th. So the budget deal has now been passed to the Senate for approval before being sent to the President Barack Obama for signing into the law. So the big question now is, will the deal give the FOMC confidence to move forward and begin tapering its $85 billion a month quantitative easing program as early as next Wednesday? So that is going to be so critical for the next move, really, especially for the precious metals, for some of the commodity currencies, of course equities as well. So this is going to be a huge event next Wednesday. So before we go on and have a look at some live technical analysis and some of the top trades of the week, I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director at the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for our traders, and also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications and appears frequently on financial television. That's a little bit about the Gold and Silver Club. So first thing we're going to do is we're just going to move over and have a look at the price of gold this morning. So gold currently trading at $1,224 an ounce. So we will take a look at that chart very shortly. So we've had quite the move over the last week. We're more or less back to where we were this time last week. around just after non-farm payroll, we hit similar numbers. So we've had quite a significant whipsaw in the market over the last week on gold, providing a lot of day trade opportunities. So we'll take a look at some of our top trades of the week so you can see how we've been getting on. So the top trades of the week using the Gold and Silver Club signature trading strategies. First of all, natural gas. This was a nice breakout that we got actually last week on non-farm payroll. We finally broke through quite a key Fibonacci here, just above 4.141. And this has been a solid move this week. It's taken up until Wednesday for us to actually hit our profit target, but we did just hung tight within this trade and moved really nicely. So entered at 4.141. We took it up to the next Fibonacci level, which was at 4.325. So it was 184 points. So the risk on that was 60 points, so $600 for each lot traded, 484 points, so $1,840 profit for a 3-to-1 on natural gas, which was good. Okay, Australian US dollar has been fantastic this week. So we had a really nice setup on Tuesday. We came up to a major Fibonacci resistance again, which is just below 0.9145 there. The risk on this was pretty tight because we were offered a very good setup on this, very tight setup. So the risk was 20 pips, and we actually, this trade ended up falling to 3-month lows for the Australian US dollar. Even today, we can see it's still breaking down. So this actually, we managed to get a nice 7-to-1 out of this. Although if you were still short this trade, now there is some further opportunity in the trade, but we're looking at additional day trade setups. But nevertheless, 7-to-1 is very good. So our risk was 20 pips, so $200 risk for each lot traded for 135 pips, so $1,350 $50 there was our profit from each lot traded. So nice 7-to-1 on Australian US dollar. Gold as well. Gold on Tuesday, we were also offered a really nice sell short position, and this was after gold rallied up to just above the 1260s level, then produced a nice sell signal again at a level of resistance there, major fib level actually as well, and we had a nice opportunity to sell short at $1,258 where we got confirmation, and we just worked our way down over Wednesday and Thursday until we hit our profit target yesterday, and we're still we're just finding some consolidation around that level at the moment. So we exited at 1,225 for 330 points. So we had a 4-to-1 on gold this week. So 80 points was the risk. So $800 risk on each lot traded for 330 points profit. So $3,300 for each lot was the profit on gold. Silver, we also had a really nice tight risk reward on silver as well. So normally you wouldn't be getting into too many correlated markets at the same time unless the risk to reward was very reasonable, which we've had across Australian US dollar, gold, silver. So that's important to note. The risk to reward has just been fantastic on these trades, and they've all come and delivered many times more than the risk on the trade. So on silver here, we entered at 20.30. We got out at 19.49, so we had a risk of 17 points on the trade, $170 risk for 81 points profit, so $810 US profit for a nice 4-to-1, which was delivered yesterday, and silver's still looking like it could fall lower today. We'll take a look at that. Okay, so those are really our 4 top trades of the week, all delivered over 3-to-1s there, so it's been a very lucrative week's trading for the commodities. So now what we'll do, we'll take a look at any setups that we've currently got forming right now. So I'm just going to switch you onto my other screens. Okay, you should be able to see this in just a second. Okay, good. So first market we want to take a look at is going to be, this is Australian US dollar. So what you want to note on Australian US dollar is we have now broken down to, we've broken down to 4 lows now on Australian US dollar. Now the next major level of support is actually 63 pips lower at 0.88468. You can see on the daily there, got quite a bearish candle, and on the 4-hour as well, we're starting to break down from this consolidation. So Australian US dollar is certainly looking weak this morning, and let me just make that more clear for you. I want to tell you what I'm looking at. There's no real reason for Australian US dollar to find support where it is at the moment. So this is what we're looking at here. Australian US dollar. You can see this. We're starting to break down anyway at the moment. We've actually just triggered. This morning we're starting to trigger a little bit low. We've got some sell signals here. You've got a nice inverse hammer here as well. So what we're looking at for Australian US dollar, if we continue to break down really below, say 0.89065, we're looking for the price just to come down here to 0.88468. So that would represent about a 60-point move to the downside here. So also I'll be looking for potential breaks of this this big level of support here, just going down to 0.88468. If we do break through, maybe we'll see that this afternoon. If we do start to break through, then we could really be on for quite a major move lower. There's not really too much to support the market from here. So 0.88468, let's just go out to the chart a little bit further, would represent a quite significant low there. That's going to be about a 2-year low for Australian US dollar if it breaks that. So we're definitely keeping an eye on that, because if it does, a lot of stops will get hit around that key level, and we could really see this trade take off like we've seen with some of the other good risk rewards this week. So that would be our top pick right now, Australian US dollar. Do watch that this morning and see if we get confirmation, see if we come down to 0.88468. If you're watching this later on the recording, you might see that this has already happened, that we've come down to that key level. So that is definitely going to be one to watch. Moving across to gold. Gold at the moment, let's just go across to the gold, actually finding a little bit of support at the moment this morning. We did break through, got a fib level here where the market just managed to come down and take our profits yesterday, which is at 1,222 US dollars an ounce. You can see gold finding a little bit of support here. We do have a bit of a support zone going back to earlier on in December. Got this whole consolidation here. We're obviously getting some buying at the moment. For those who are short, I would imagine we're going to have stops around the 1230 level. So that's going to be really confirmation for those who are looking to go long here at the moment. Otherwise, if we can't get above that, we might just, this candle isn't fully formed. It's only been running for the last hour or so, so it could still completely reverse. We'll see. But we need to get above 1230. I think for more buyers to get interested today and potentially start to form a bottom here on gold. That should follow through. If we do get a bullish move to the upside, that might follow through for Australian US dollar. That could get supported. Otherwise, if we can't break 1230, I would imagine that we're going to just continue lower here. And if we continue lower and break through 1220, we could come and retest weekly lows. Gold is going to certainly going to be one for to trade next Wednesday. The FOMC statement, that's when we could really start to see some fireworks on the gold market. Because if we do get some tapering, we could certainly see gold plummet and start breaking through some major levels of support. So I would definitely be watching out for that for gold at the moment, moving into next week. So we'll see how gold moves today. We'll see if gold does manage to form a little bit of a base, or whether we break down lower. If I just take a look at the daily for gold, you can see we're not far off. Really actually going all the way back to the lows from May, really. We're not far off the May lows at the moment, so 6-month lows. But we'll see how this forms on the daily at the moment. It's early days at the moment because it's still, this candle's only been formed in the last hour or so. The overall trend is very much down on gold currently. Moving across to silver. So silver's finding a little bit of support this morning. Actually, one thing to note is copper today has actually had quite a solid move. Now, copper does tend to, I'm just on the futures contract here, just get you on the historical chart. Let's just get that on the historical chart for you. Okay. Yeah, copper is now managing to close above all of its key moving averages. So copper does tend to, it can certainly lead the way sometimes for the metals and give that earlier signal. Now, we haven't seen this yet. We've been fairly bearish with gold and silver yesterday. but they haven't broken down to the lows perhaps that we might have expected, down to 1200 and even down to 1180. I would watch copper here and see if copper is going to break out today as well. If copper, the next really key Fibonacci level we've got here for copper is 3.350. If we do continue and get a breakout on copper, that could provide some support for gold certainly today and for silver. Whereas if copper was to turn around and we start seeing copper come back down to the downside and come back and retest 3.296, that could provide some weakness for gold and silver. So if we just have a look on the 4 hour, we're in a bit of a consolidation here. I'm just going to get a screenshot for you. Okay, so this is the consolidation we've got on copper. So if we do get a breakout of copper to the upside and we come and retest 3.350 that's going to help gold and silver out. That's going to help them to find support today, and we get some potential moves to the upside here. If we do break lower, we come back down to the lower end of this support zone, come back and retest 3.2967. And certainly if we break through that low, that could offer some more downside for gold and silver. So I'll definitely be watching copper here. Copper by itself is very day tradable as well. We've got some very clear opportunities. We've had some really good moves as we've just followed this uptrend here on copper. But we would be watching out for that as well for copper. Actually, whilst we're talking about the correlations, we will take a look at the US dollar index. So let me just load that up for you. Okay, so this is the US dollar index we've got here. Okay, so US dollar index, you can see we have put in, certainly the last couple of days, a strong rally. This has put a lot of pressure on Australian US dollar, on gold, on silver. We've actually just come up and we're testing a 50-day moving average at the moment on the US dollar index. Let's just put this onto the 4 hour and have a look. We've had quite a bullish move here on the 4 hour as well for the US dollar index just today. So if that has a continued move, we come up to the 80-50 level, the next fib level there. Again, that will put some pressure on gold and silver here. I'll definitely be watching this. I want to see if the US dollar index can actually close above the 50-day moving average today. That's going to be important for any further downside for gold and silver. So you definitely want to be watching this correlation too on the US dollar index. So we can see here where we broke down basically earlier on in the week, which helped cause a rally for gold and silver. And then this has turned around as we've come down, found some support around 79.70, and this is where we've rallied to the upside. So you definitely want to be watching out for that inverse correlation with gold and silver today as well. For natural gas, this is where we had a nice breakout on the last Friday's non-farm payroll, so above 4129 here. We came up, hit our profit target just above, just below 4.33. So the next real level for natural gas, you can see it's still staying clearly above key moving averages. We're very much in an uptrend. Seasonality-wise, natural gas this time of year does tend to be more on the bullish side. You've got a lot more demand for natural gas as it gets colder, particularly in the UK and around the northern hemisphere. So what you can see is this very strong uptrend, which we are still maintaining. So I'll be looking for potential continuation of this move, and the next real key level here is going to be 4.65. So we're just actually coming back and retesting this previous Fibonacci level just this morning. So I'll definitely keep an eye on that because there is some really good risk to rewards here as we consolidate along this level, 4.33, and then we could just see a move here if we find support and we get the next move upwards. We'll be looking for a move just below 4.69. So natural gas, definitely one to keep an eye on as well. We've had really nice trades on this over the last few weeks, just as we've continued to ride this overall uptrend. It's not ready to give in just yet, this uptrend, and we're still way above these key moving averages. So natural gas is definitely one I would say you want to be keeping an eye on. So let's move over to oil. We definitely want to have a look at oil. Oil's looking very interesting right now, actually. Let's look at Brent first. Brent has actually broken quite a key level, 108.43. We're now below some key moving averages. I do favour a move lower here for Brent coming down to the 107 level. So we have broken. We're closed actually below this major level of support too. So Brent, we are bearish on the short term here. We are looking for a move. Essentially, this is the key level of support we broke. 108.43, we closed below it, and now we're looking for a move like this down to the 200-day moving average as well, and down to 106.89 Fibonacci level. So that would be our take profit on Brent. We'll see whether we get a further breakdown there as well. We'll see how the market reacts once it gets to 106.89, and see if we get a further move down to the 104.52. That won't happen obviously today. That's unlikely, but we could come down to 106.89 today, and then we'll be watching Brent very much moving into FOMC next week. But it's looking bearish now for Brent. So again, that's one for your watch list. WTI still consolidating actually. The weakness in Brent could bring WTI down here, but we are still holding a very clear level of consolidation, which we're going to have to trade between. We will get a breakout soon in either direction, which is probably going to present quite a volatile move, and a continued move as well, as we've just been coiling up within this consolidation. So if you look at WTI, we've just been moving within this support and resistance. So between 98.87 down to 97.02. You can see how well the fib levels work. We've just been moving in between these Fibonacci levels, and the market is really looking now either to continue to stay consolidated, then we might not get a breakout to FMC next week, or we're going to break lower and come down, and that's going to represent about 100-point move lower if we break down, or we're going to break out to the upside, in which case that's going to represent circa, we've got some resistance at 99.58, but above that we could have a really nice move up to 102 level. So we'll be watching out for that, but that's really the three ways we see this trade going: either continue to consolidate, break lower, or break higher. So again, WTI is a really good one to watch, but Brent has already broken lower, so Brent is our top pick for that right now. Okay, and finally, let's have a look. I think we've covered all the key markets we wanted to have a look at. So just as a recap there, so gold, actually, let me go on to that. Actually, we'll start off with Australian US dollar. There you go, Australian US dollar. Thought so. This is going to break lower, isn't it, today? So I would say Australian US dollar is looking bearish. It looks like it wants to come down, retest 0.88468. That's going to be an event area. Let's see what it does if it gets there, and see if it takes that low out, because that's going to represent a significant low for Australian US dollar. We could see a lot of more stops it. So I'll be watching that very carefully today, Australian US dollar. Gold at the moment, gold finding a little bit of support, but as I said, if it can't get above 12.30, this level, this candle is still pretty new. It's got another 155 minutes to go. If we can't get above 12.30 today, that could just reverse and come back down. If we take today's low out, 12.20, we could then come back down all the way to 12.11. So we'll be watching that for gold, and we'll also be keeping an eye on natural gas, and obviously Brent and WTI, and also silver will be one to watch as well today. So, silver I'll be keeping a close eye on too, and just watching the correlation through the US dollar index as well. See if the US dollar index, see how that closes today. So if we just go back to the US dollar index, the US dollar index gains momentum today, and we come back up to 80.50. That's definitely going to put pressure on gold and silver. So that's where we could start getting some confirmation that gold and silver are heading lower. So if we see the US dollar index do this today and come up to 80.50, then you are going to see gold and silver go down, and Australian US dollar too. Okay, so let's take a look at the, actually I'll just check if there's any questions at all. Okay, so Maverick there, what is your bias? Yeah, I would say, particularly with Australian US dollar this morning, it's looking bearish. I would definitely, I see that coming down to 0.88468. On Brent, I would say that's looking bearish because of the close yesterday. I see that going lower. Gold and silver there, we might just consolidate today, but those are really our top picks at the moment to have a look at there. Going back to your question, Maverick. Okay, fantastic. So let's have a look at the key news coming out today. Okay, so actually there's not too much key news coming out today. We'll go on to next week's major news. So next week on Monday, the 16th of December, 1:30 p.m. GMT, 9:30 a.m. Eastern Time, we have the New York Empire State Manufacturing. That index rates the relative level of general business conditions in New York State. So a level above 0.0 indicates improving conditions, below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. That will inversely impact gold and silver. Next Tuesday, we have the US Core Cpi at 1:30 p.m. GMT, 9:30 a.m. Eastern Time. That index measures the change in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It's a key way to measure change in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. So again, that will have a big impact on gold and silver. Next Wednesday, of course, so for those of you who regularly trade the crude oil inventories, if you don't, I would highly recommend you do if you are trading oil regularly. So that's next Wednesday at 3:30 p.m. GMT, 11:30 a.m. Eastern Time. That was worth at least this week 100 points for a very quick move to the upside when the crude oil inventories came out at minus 10.5 million barrels, and we immediately saw a surge in prices on crude oil. So that data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken as bullish, which was certainly the case this week. Wednesday, the 18th of December, put this in your diaries, 7 p.m. GMT, 2:30 p.m. Eastern Time, the US FOMC statement. So it's the primary tool that the FOMC used to communicate with traders about monetary policy. It contains the outcome of their vote on interest rates and other policy measures, along with commentary about the economic conditions that influence their votes. So most importantly, it discusses the economic outlook and offers clues on the future of their monetary policy. So very high impact announcement next week. Thursday, the 19th of December, we have US natural gas storage. Very good announcement if you trade natural gas, 3:30 p.m. GMT, 11:30 a.m. Eastern Time. So the Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst this is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. And that's, of course, important because CAD is correlated to oil price too. And then we have Friday, the 20th of December, 1:30 p.m. GMT, 9:30 a.m. Eastern Time, the US GDP. So that measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. It is the broadest measure of economic activity and the primary indicator of the economic's health. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And that will have important correlations with gold and silver. So those are all the major news announcements you really want to have in your diary for the coming week, especially for commodities trading. Now, if you are interested, certainly in taking your trading to the next level, we're doing just one last workshop this year, which is on Saturday, the 21st of December. You can find out more about our Gold and Silver Club Masterclass workshop, also our live trading room program, and our Inner Circle live trading room package. So you can find out more really to take your trading to the next level for 2014 and get prepared for some massive opportunities. So to request information on the Gold and Silver Club live trading room and coaching programs, you can very simply go to jointhegoldandsilverclub.com, just www.jointhegoldandsilverclub.com, or contact us. You can just email us at office@thegoldandsilverclub.com, just below on the email, or you can call us to our London, New York, or Johannesburg offices. So London office is 0207 193 0403. New York is +1 646 808 0403. And our Johannesburg office is +27 11083 8403 to find out more information. And you can also subscribe to our newsletter, so you will receive free weekly gold, silver, oil, commodity currency news, live market analysis and prices. So do make sure you subscribe to the newsletter too. Okay, perfect. So guys, that's pretty much that is a wrap for today. So good luck for the rest of today's trading and next week. And we wish you a great weekend, and good luck for next Wednesday's FOMC statement too. And we'll be back next Friday to do a post-analysis of what happened during the FOMC. So make sure you join us for that too. So you've been a great audience, and thanks to FX Street for putting the webinar on. And we'll definitely see you on the next one. Okay, take care everyone. See you later. Bye-bye.